presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books, and it's generational. Thank you.
You are. Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Okay, folks, Larry Pesavento setting in for Tom O'Brien, and I posted the chart of the NASDAQ early this morning. As you can see, before the market opened, we had rallied up to a 61% retracement on the NASDAQ from the high we made 3 months ago. That in itself was very important, but also the fact that we've had these big earnings come out in the favor of the bulls, and that's one of the things that we'll be talking about as we go through some of these charts today. But you'll notice that's what happened early in the morning, but just shortly after that, 1 hour after the opening, you'll see that we had an explosion in the NASDAQ. That set the NASDAQ up 350 points for the day, and the Dow Jones was up about 100, then dropped 350, and then rallied up 300, and then at the close it is down another 200 points. So the Dow was not participating at all, but as you can see from this chart here, that this thing exploded to the upside. As we know, the NASDAQ 100 is basically 10 stocks, and we're going to look at some of those stocks today to show you how they affect that index itself, because it's been extremely powerful. Now, the Dow Jones Industrial Average is only 30 stocks, folks, and they are price weighted, not cap weighted. In other words, capitalization, the number of shares outstanding, doesn't mean anything. It just means the price of the stock itself. That's a fallacy, and that's one of the reasons why it was not a leading indicator. And the reason why it's even posted is because so many people watch the Dow Jones Industrial Average. Even though if you take 10 of the Dow stocks, that'll cover about 85% of the value of the Dow Jones. But that's neither here nor there. That's the way we have to work through these indices. But you got to know how they're made up sometimes, because it's very, very important. Now let's take a look at some of these stocks. Some of these we've been following. We don't follow stocks too much on the 24/7 Fibonacci show that I do each day, but we do put them in and show the folks what the patterns are, because people are watching these, and they're sometimes a good indicator of what's happening in the market. This happens to be Apple, and as you can see here, we had this giant ABCD pattern measuring down here to this level of I believe it was 126. The low happened to be 124, and as you can see today, we exploded above the 61% retracement, and we're heading towards, we're past the 78% level today also. It's still in a downtrend, but at least this major bottom, this major A, B, C, D bottom is what was so important. This was happening in January. Now let's take a look, go down memory lane here, because we talked about this on my show just about every day, because I said one of the best patterns that we had for a buy was in January was Amazon, and I'm going to share that with you right here, because it's a beautiful pattern. We see these all the time. This happened to be a textbook. You'll notice here from the high we made way back here 4 or 5 months ago, the market comes down, makes a 382 retracement, and then retreats down to this ABCD pattern that measured to 81 and 3/4, I believe, and the low on Amazon early in January, on the 5th of January, happened to be 81 and 3/8, or back at the old days, 81.38. And from there, you can see it just exploded, and today it's up over 15% from its bottom. I check that again, folks. It's up 20% from its bottom, and that's just in 1 month. So that's telling you that there's been a big, big group of shorts covering, or the texture of the market has changed, and we're going to find out very soon if that's the case. But that was just amazing that Amazon went from 81 to 112 in 1 month. I mean, that's just an explosive move to the upside, and anybody that took advantage of that would be a very, very happy camper. Okay, the next one we're going to look at is one that's in the news constantly, and that is Mr. Musk's Tesla. We'll get this up here. It also has had a huge move. Remember, back here just a matter of a month ago, here in early January. Again, the January effect, folks. The January effect means that the early morning or the indications are that the small cap stocks, the Russell, will gain on the large cap stocks during the first month or so of the new year. And you'll be able to see this very dramatically when we show you the Russell chart just a little bit later. But we're into Tesla right now. You can see the ABCD pattern that is here. That measured down to 109. The low was 106. That, again, was on the 8th of January. And then the market turned, and like a rabbit, it's up considerably, doubled in price. Well, not quite doubled in price, but very, very close to. It's about a 190 now. Well, that's very close, but it needs to get to 218 in order to double. But in 1 month, that is a huge amount, a huge gain in 1 month, folks. And they're all doing the same thing pretty much. Some of them more than others, but they're all doing the same thing. If you post, today's AI. Someone asked me a question about the AI. We were doing that on my show early today. One of the things that I was trying to show the folks was that there was a possibility here. Let's get this up here. This was when my show was just about starting. This AI program is based on stuff that's right out of the Floor Traders Handbook. It shows the market has a tendency to make highs and lows at certain times during the day. And this was, you can see here, this is where we were. We were trading just under around 41.92, something like that, just under the 42 level. That's where it was supposed to top. And of course, we'll look at it here. And I did do it just now because I keep a record of these things, and you'll be able to see this one actually worked absolutely perfectly. The problem is, folks, it only works about 65% of the time. But if you've got time enough in the day and you've got a nice little pattern that's up there, you got a little 3 drive or something that will tell you. But once it starts down, you want to say, okay, if it starts making new lows in here, maybe I should, or new lows from this area right here, maybe that's what's going to happen. And of course, the market has sold off. The Dow was up 150 points and now is down 250. So that's a 400-point swing in the Dow Jones today. So these do not work like this all the time. But when they do work, and sometimes, look at the bottom, folks. It had the absolute bottom right here early in the morning. And that's a huge move there. There was 60 points up and 50 points down. That's a 100-point swing if you got it all. I'm looking for little tiny pieces of it. That's basically what I'm doing. I'm not trying to, knock the ball out of the park every 5 minutes. I'm just looking for places where I can get in and not risk very much. That's the key to what I try to do. It's all related to how much you risk, not how much you try to make. And I don't know why anybody is calling me now. I wonder who it is. Oh, it happens to be the old, yes or not, it's the old spam people. Sorry, I'll turn this puppy off and they won't bother us anymore. There we go. Sorry, folks. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, stay with me 1 second here. Okay, folks, this is Larry Pesavento sitting in for Tom O'Brien. I wanted to take a moment here and look at the Russell, because the Russell is one of the second biggest of all the futures for stock indices. Number one is the E-mini S&P, number two is Russell, number three is NASDAQ, and number four is the Dow Jones Industrial Average. So we have to pay attention to this one, especially since it has such a strong bias to outperform the Dow Jones during the month of January. And as you can see here, as we were bottoming right here at the 78% level in January, we've had a move that's gone straight up. Look at this. If you like ABCD moves, and I certainly do, but you look at your A leg, which is back here, and you look at your B leg, which is right here, and your C leg, what is right here. Now, there's a formula for finding what this equation is right out of Pythagoras. A squared, B squared equals C squared. But if you add B and C together, okay, take that sum, and then subtract point A, B plus C minus A will give you D. And that number measured to 210. And the high today in the Russell was 212. It's trading substantially below that right now. Now, are we sure that this is going to be the larger ABCD pattern? No, we do not. But if we back off just a little bit from here and then go higher, that's going to be great information to say, folks, we are looking at a bull market that has been revived, and it is getting to stay alive, because this thing could go a whole lot higher. Because usually when you think the markets can't do what they're supposed to do, that's when they usually do it. Now, yesterday on my show, we had Bill Meridian of Cycles Research, and he had a couple of indicators that I think we really need to pay attention to. One that I watch, because it's relative, not more than relatively, it's very important, and that is margin debt. And I just want to show you what margin debt was doing. The reason why we were so bearish here in January, as you can see here, we had this huge spike up in the margin debt, and now look at it. Margin debt, they've covered their margin, and they're basically searching for cash, because look at this, came all the way back down. Look how these lows are happening. So this is an indicator that when they get up to this level and you have a pattern that matches it, gives you a really good opportunity to say, I don't have to risk very much here. So that's where you want to take your position and put your stop in and see if that's going to work. And that's really what you're trying to do. You don't have to be a home run hitter, to make every trade a winning trade. No one can do that. All you try to do is pick the ones that you think you've got a really good opportunity with, and that gives you the one that's really important, okay? So another one here I want you to take a look at is also very important, and that is the people that are exposed to equities, whether they've been long or stock at this particular point in time. And as you can see here, from this chart that Bill Meridian put just to, you can see they are very marginally exposed. See, way up here in January, they were heavily exposed, but look at them right now. They're really at a very, very relatively low level historically. So that's why this stock market could have more to go on the upside, folks. So, I've been bearish for a long time, up until, December the 13th, December 13th was when we had the last sell-off. Then we came down into that low in January, and that completed all of those ABCDs on the major big stocks that I hear about and watch. Don't trade them, but I watch to see what the patterns are. And I saw the patterns in the NASDAQ, the S&P, the Dow Jones, and the Russell all making ABCD. I says, well, this thing's going to bounce. How much? I don't know, but we're 5 weeks into the bounce now, and we made new highs in some of these things. Look at the Russell. It's just recently, it was way down there. Now it's made a giant ABCD up there at 210. And that's what's interesting, because they take all the news that you want, but it's the number of people that are buying and selling that makes the game. And let's take a look at one other indicator that Bill was kind enough to share for it. I'm going to blow it up here so we can see it a little bit better here. These come from Bank of America's Global Research. They do a really good job with their research, folks. Recommendations, I don't know, but they tell you what historically has happened in the past. They don't do too much telling us in the future. You got to do that yourself. But look at these lows here, folks. These are when you want to be looking to be a buyer of some of this stuff, because people are, they're heading for the hills. They don't want to have anything to do with it, whether it's inflation or whatever it happens to be. These are major lows down in here. We could be looking at a major low back here in January the 4th. And with the action that we've had, my goodness, stocks like Apple have moved substantially, but look at Google. Amazon doubles in price. Well, not doubles in price. It's up 60%. Tesla up about 75-80%. Meta, which is the old Facebook, that's only up about 30%, but that's been hit really bad. It's been up 25% in 2 days. So all of those things are telling you that there's something big going on in these stocks, and you want to pay relatively good attention to what you're watching, because if they really continue to go, they're going to go a very, very long way. And there's no way of saying anything other than that. And speaking of Meta, I wanted to bring that up to you, because this is a stock that you want to think has been beaten. We went from $374 a share. Hold on one second, and we'll get this up here. $374 a share down to $88 a share. We're now trading up around that 118, 120, I believe, somewhere in that ballpark. I wasn't exactly sure, but you can see here the major ABCDs, A, B, C, D to the downside here, and another A, B, C, D downside right here. Then we start the up move, and then the earnings, something came out yesterday, not about earnings, but spending money and buying back stock, and the whole world had to have it. Nobody wanted it down here. The whole world wants it now with this huge gap in here. So we're going to find out whether that gap's going to be filled or not. But the fact that so many people were watching this stuff was an indication that, wow, it was really, really oversold. And when the slightest bit of news came up, I mean just the slightest bit, bada bing, bada boom, there you are. You're looking at a market that's gaps up substantially. And now, if this is really good, they have trapped a bunch of shorts down here, folks, and this stock could really run. So you've got to give this market its room to breathe. It's okay to try to pick a top. I was short at 41.56. I was out at 41.66. But folks, we were short all the way down to 40.10, and which is where we went long at 40.10 after covering our shorts there, and we got out of those about 50 points higher, missing the last part of the move because yours truly put his sell stop a little bit too close, and that knocked us out, and then it rallied another 120 handles, but 150 handles. So that's just the nature of trading, folks. We made it up in some other things. We happened to be short the euro, which was okay. Hey, listen, we're going to have to take a break here pretty soon. In just a few seconds here, Well, we've got a little bit more than that. We got 48 seconds left. So if you have any questions, it's not Tom O'Brien. It's Larry Pesavento, 877-927-6648. When we get back from the commercial, I'm going to talk to you just a little bit about the U.S. dollar index and the euro, and to show you what we're looking at on some of these things. So we'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking about the euro right now and the U.S. dollar index. As you can see here in the picture that I'm showing you, the chart shows you the 3-drive pattern in the euro up here at this 110.20 level, and that's where we recommended on the show here at 110.617, I believe. Excuse me, 102.17. 110.2017 is what we were looking for, and it's broken well over 150 pips from that level. Now, as we were watching that at the same time, we were watching the dollar index making an important low down here at the 101 level. Now, it was a little bit stronger. That was mainly because some of these other currencies are much weaker than the euro. Remember, the euro is 33% of the dollar index. So we made some type of a bottom in the year. How much of a bottom? We don't know, but it could be substantial. No one knows what's going to happen next. All you can do is watch the series of next trades. Now, there's a market here that is really ripe, folks. I want to get this up here and show it to you. This is right from the newsletter this past week, and we were watching it extremely closely. Unfortunately, not close enough, but as you'll notice here, we were looking for a target up here at 1975, and it got to 1974.50 and immediately dropped $50. Went all the way down to 1922 sometime today. So $53 drop in gold just on that. Now, we were keeping a very close eye on that, but it happened in the middle of the night, and it didn't quite make there. The price, I'll get it up here so you'll be able to see it here. It just, I think our order was setting within $0.50 of that high. And of course, you know, if you're playing with the Cupid doll and you don't hit the prize, you don't get anything. So we missed it. Our order was right there with a stop above it. Unfortunately, it didn't get fit. It broke down $50. And when it broke straight down, folks. It didn't bounce hardly at all. There was no 382 retracement. It might rally $2 or $3, and then it just kept hammering and hammering and hammering it. And speaking of hammering, folks, those of you that listen to the 24/7 show, we've talked about natural gas, folks. Natural gas hit $2.46 today, folks. 9 months ago, it was trading at 10. Now it's $2.46. That is $76,000 a contract. If you shorted it up there and stayed short, you'd be up $76,000. And that's a lot of money, either on the upside or the downside. Now, speaking of the upside, let's jump back into the arena and take a look at our price of our silver here today. This was as of the weekend, of course, with right out of the newsletter, but I wanted to point out to you the high that we made today. Get this up here and see it. Went right up here, folks, to the high, and then, of course, it broke $1.50 in a matter of about 6 or 7 hours. We hit that high right up here one more time, and then it broke really hard. So that's telling us that we've probably got a major correction coming into the silver and gold market, and I'm thinking of probably maybe $2.50 to $3 an ounce in the silver, and at least $125 to $150 in the gold. How can I say that? All I can say is if it can make $50 in one day, it can make $120 or $150 in 5 or 6 days or 3 days, or even one day if it gets moving really fast. So watch these numbers, watch these patterns now in gold, because if I'm correct, this is the last train from Boot Hill, folks. This thing is not going to make a new low below the lows at 1618 that we had way back in October. That's a major low. That was a 382 on the weekly on the gold, folks. So you're looking at a correction that may go to a 382 of the move, and that's what you want to be watching. Stop and think of it, folks. You had 1975 for the high, and you had 1618 for the low, so that's $340, and so $130 down will take you to that level you want to be watching. So you take 975 less 130. Guess where it's at, folks? 845. So watch 845 in the gold if we get there. Those of you that follow the 24/7 newsletter and also the videos that we send out each night, that is numero uno on my watch list. So very, very important. You know, we like the gold market. We like the silver market. We would like to see a great correction, washing everybody out one more time. And believe me, folks, with that strong move we had in the last 6 weeks in gold, boy, it was certainly telling you, yes, we are for real. We didn't get more than a $32 correction once or twice during that whole run. It just kept going higher and higher and higher. It back off, runs $14 and back off $3. Run $17, back off $4. So it was hardly self-correcting, as they say in the trade, but it was going higher all the time. So we want to watch that. It's going to be a big move, but we've certainly made some type of a top in here on gold. We missed our objective by $0.50 at 1975, and then also the silver went right up to it. I don't trade silver. I don't recommend it very often. Not that it's not a good thing to trade. It's just that I don't trade both gold and silver at the same time. If I'm going to be long gold, I might want to be short silver just to put a hedge on. I'm not going to be long gold and long silver. That's known as the Texas hedge. You're long the futures, long the cash. And if you're long, you're wrong. So you've got to be really careful with that. So if you got two things that are related, like soybeans and soybean meal, 80% of the meal is in the soybean, so that's your basically long soybeans. But if you're trading it against something else that doesn't have the same value, then that's okay. So if you're long gold and short, or long corn and short soybeans, that's okay, because you're looking at two different commodities. But if you're looking at the same commodity, be really careful. Soybean oil is an exception because it's used in the traveling stuff, because it's an energy complex as well as the shortening and the corn and corn oil and all that other stuff. But those are the main things that we're paying close attention to. All right, let's move on here to the to the next one here. We'll see if we've got anything else coming on here. 1 second here. No more questions right now. Let me get one other one here that I wanted to bring to your attention that is really interesting, and that is the pullback that we're going to be having here in the heating oil, which has already started. If you'll notice from the pattern that we're looking at here in heating oil, it has been heading down. It had a perfect Gartley up here last week on Monday, came down every day last week, down almost every day this week, and look, it's coming all the way down. If we take this out, folks, if we take out this low in heating oil, down about another 30 cents, you're going to be looking at a monster A, B, C, D. You're going to take it way down here to make a double bottom, going back to when they started the fighting over there in the Ukraine. So this is we're wild markets, folks. This is wild times at Ridgemont High, because we're having great volatility. The patterns are working nicely, and they fail nicely too, because when they fail, and they do fail, you've got to be able to step up and say, okay, we've got to go to the next stall. There'll be another horse running very, very shortly. So let's keep these in mind as we're watching these here today. Very, very important, because we're in a real critical level. The wintertime is almost getting ready to get over there in the Ukraine, and that means the weather is going to be warming up right after March, and that means the ground is going to soften, and those big tanks do not like soft ground. They get bogged down. So whether they can get those tanks there in time to do anything, there might be tanks, it might be no tanks. Who knows what it is, but we'll find out for sure. We'll be right back, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, we're back, folks. This is Larry Pesavento setting in for Tom O'Brien. And one of our listeners has just asked a golden question. And the question is, how do I maintain my courage? Folks, it's a question of how much I love this business. Jeff, are you on the phone?
Yeah, but you got the question right. I was going to ask you, I've heard your story about when you had a terrible drawdown and you lost money that you accumulated for a long time. But the question is, how did you keep coming into work every day? What did you tell yourself? How did you have the fortitude to keep showing up?
Well, it was very simple, Jeff. I knew what I had done wrong. When I had lost the money, I went from $1.2 million down to minus $2,700 over a period of 7 weeks during the crash in 1974. And what I knew I had made some mistakes, and I went back to my teacher back in graduate school, and he laughed at me. And he said, do you think you're the only person that's ever done this? He said, look at your P&S statements and it'll tell you what you did wrong. So I studied those, and I studied them, very, very extensively. And I realized I was averaging down to losers. I wasn't using stops. I mean, that was third grade. I was lucky I didn't lose more. But what happened was
what I really wanted to ask about is during those 7 weeks when, you're getting the big drawdown, during those 7 weeks, how did you keep showing up at work? Didn't you just feel like
I thought that was the day it was going to turn, and it wasn't that day. It would go up 3 days and then go down 8 days, then go up 3 down 8 days. I never worried about not making the money back because I had made a lot of money and spent a lot of money on the way up. So I knew how to make money. What happened was I was just stubborn. I just didn't. And when the last day finally came, I got out of cattle limit down. They ended up being limit up that day, which would save me $25,000. But it was good that didn't happen because I was forced. I mean, I had the money. I mean, I had plenty of money. It's just that my account was minus $2,700. And so I started to study. After all those years, I said, well, I'm going to have to learn what I did wrong. And I knew what I did wrong. So once I stopped making those mistakes, it was back in the game again. And in a matter of another 18 months or so, I was definitely back in the game. So I've never and I have bad days in here. This week, as a matter of fact, we had a tremendous week in the S&P. We made like 150 points, including a loss of 20 points today trying to pick the top, and 7 points of getting stopped out before the big rally yesterday. Even with all of that, it was gone. But what happens today? We got about a $1,500, $2,000 win going in the euro. So I just keep doing it. That's why I don't have any fear over that. One of the reasons it keeps me young, Jeff, is because it's a challenge to me. But I made a decision 38 years ago that I knew I could teach this to people if they would learn to do what they were supposed to do. The problem is trading is simple, but it's not easy because some people will do everything in their way, to keep them from learning. That you can tell them everything they're supposed to do and they won't do it. So if you have to work with somebody, you got to make sure that they're doing the right thing. And if they get off the beaten path, they are not embarrassed to say, God, I really screwed up. part of the reason why I never got out, I was embarrassed that I had that. Nobody knew that I had that larger loss when I was at Conti, because the equity runs, when you picked them up in the morning, they were very, very, very private. They were put in a special sealed envelope, and you got them. I'd go into the bathroom and look at them and say, oh gosh, another 75 grand down the tubes, But I wasn't really concerned about it at all. It never really was. Even when direct.
It's because you had confidence.
Oh yeah, well I'd seen enough.
You never lost confidence.
Never lost confidence. I have a total belief in what I do with AB equals CD. I prove it day after day, week after week, month after month. And, it just works. It doesn't work all the time. The one thing that hasn't happened, knock on wood, in the last 18 months, I haven't had a string of losers, of 7, 8, 9 losers in a row, which does happen. But part of that is I'm so conservative with the TFNN stuff, because I respect Tom and Tommy and the whole group, that I don't want to, have egg on my face by trying to, do something really stupid. So I try to just pick out the trades that look like they have the best probability. But even then, I'm going to have some losses in a row. But I never have any doubt of ABCD. I've looked at, Jeff, no one in this planet other than a computer, no one personally has looked at charts more than I have. I can say that. If they're out there, I've never met them. Let's put it that way, because I do it 7 days a week, 10 hours a day, and it's what I love to do. And my second love, of course, is poker, but I don't play that much poker anymore. But I have a total belief in what I'm doing, because I see it work over and over again. So I know it works. Great.
Well, it tells you how the importance of proving to yourself that a system works and having the confidence to hold through the drawdown.
That's exactly correct. It's when it gets bad, and you know what happens? Right after the bad time comes the good time, because that never fails. Because it's just there. The numbers are there. We've done simulated trades, like 10,000 of them in the euro, and it proves that if you do the ABCDs, you're going to be right about 60% of the time. You're going to make 2.5 to 1. And you're going to have some losers 8, 9, 10 times in a row, but you're going to have winners more than that. So that's really what it's all about. And you just got to keep plugging at it. And don't beat yourself up. I beat myself up when I make a stupid mistake. The losses don't bother me. The mistake bothers me. Like I changed the stop on that S&P yesterday. No reason to do that. If I hadn't been watching closely, and I usually don't, it was Fed time, and I saw the big rally after the buy came in. It rallied 40 handles. I said, we should be okay. So I moved my stop up, and it goes down, nicks out my stop by 1 point, and then rallies 110 points. Those drive me crazy, but they happen. Nothing I can do about it.
All right, thank you very much. I appreciate it.
Hey, thank you for calling in. That's good to listen. You bet. It's good to listen to that stuff. I started teaching long time ago, and I've been very blessed. My daughter is she's a psychiatrist, not a psychiatrist, she's a psychologist in San Luis Obispo, and her boyfriend were out. It was actually the first boy she ever dated from Westlake Village. They live together now in San Luis Obispo, and they were out to dinner, and somebody saw that she goes by Jill Pesavento, and someone asked her, she said, "Is your father Larry?" And she said, "Yeah." She says, "Well," she said, "tell him we said hello, because he changed our life." He said, "He taught me how to trade foreign exchange, and it's one of the reasons I can live here at the beach now." And he said, "I want to wish him the best." And he asked her, he says, do you trade? And Jill says, she said, "That's the most boring thing I've ever seen in my life." So she has no interest in it. My other daughter, who's a doctor, has no interest in the trading either, which is okay. Some people like chocolate cake, some people like white cake, but that's neither here nor there. I got off the beaten track here on Tom's show. I hope I don't discredit him any. I wanted to show you here the chart here, folks, of the Dow Jones Industrial Average. Give me, shut the front door. Here it is. Hold on a second. Get this up here, and we'll be able to see it here. This is where we are today. You'll see we got up into this area here one more time, folks. So, it's got to be popping up above here pretty quick. Otherwise, the Dow doesn't look nearly as good as the NASDAQ or the Russell. The Russell looks the best, folks. The Russell looks the best. Second best is the NASDAQ. Third best is the E-mini S&P, and the last is the Dow Jones. That's how they look today coming in. But we got a break coming up here, and when we come back, we'll take an updated look at this Dow Jones, okay?
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back, and I posted the chart of the Dow Jones E-mini showing you the divergence, and then I posted the chart of the Russell showing you which has been the leader of the pack for the past month. And remember, the January effect in stocks means that the small cap stocks gain on the large cap stocks during the first part of January, and January is over, and this thing is still going. So if you measure that AB equals CD pattern today, it measured to 210, and the high on the Russell today was 212. It backed off about 20 points from that level, but that's still close enough. And whether that's going to be the high or not, I don't know. But stop and think and look at that E-mini contract or the E-mini Dow chart that I showed you. It's lagging very, very badly. Now, the explosive move that we had today was started by the NASDAQ, mainly from Meta last night, and then also from Amazon and Tesla and one other, Apple. All of those were very, very strong, and that gave a very bullish bias to the market. Now remember, after the high was made, the S&P dropped 50 handles, and of course it bounced back quite a bit, but it dropped 50 handles. The Dow Jones dropped 350 points, also getting hit pretty hard, but it held up relatively well during that time. When those things like that happen, it's telling you that, yes, there's some, buying coming into these things, and that's really what you have to pay attention to. Okay, so that's the important thing. It's not how much money you make, folks. It's how much money you don't lose. Remember that, and you'll always be a whole lot better off than what you might think. Look at the S&P came right back. It's rallied 30 handles off the bottom, folks. We're now trading at 418 in the S&P. So we're having some fun over here. We'll see y'all tomorrow. Live every day in an attitude of gratitude, and may God bless.